Welcome to another episode of Crypto Asset News. What is the future of cryptocurrencies? Cryptocurrencies have been gaining popularity in recent years, and many are wondering what the future holds for this disruptive technology. From Bitcoin to Ethereum and beyond, there is a lot of speculation about how cryptocurrencies will shape our financial systems in the years to come. In this video, I'll explain the potential impact that cryptocurrencies could have on our lives by delving into their current status and possible implications for the future. The idea of virtual currencies has been around since the late 1990s, but it wasn't until 2009 when Satoshi Nakamoto released his white paper on Bitcoin that they started to gain serious attention from mainstream audiences. Since then, hundreds of other digital coins have made their way onto the market as well, each with their own unique characteristics and features. Yet despite all these developments, it's still unclear what kind of role cryptocurrencies may play in our day-to-day life going forward. What lies ahead? Will governments embrace cryptocurrency or continue to fight against its spread? Could blockchain technology take over traditional banking practices? These are some of the questions we'll explore as we delve deeper into this topic and consider what role virtual currency could possibly hold in society's near future. First, let's explain what cryptocurrencies are. Cryptocurrencies have become a popular form of currency in the digital world. People can now buy and sell goods with these new forms of money without ever having to use traditional currencies like dollars or euros. But what exactly are cryptocurrencies? They're an entirely new type of asset that has been created out of nothing but code which is written by computer scientists and stored on computers around the world. Cryptocurrency works through a system known as blockchain technology, which uses powerful encryption algorithms to keep track of all transactions made within it. This means that each transaction is permanently recorded on the public ledger, which makes them virtually impossible to forge or tamper with. The blockchain also ensures that all transactions are secure and anonymous, so users don't need to worry about their personal information being exposed during a crypto crash. The concept behind cryptocurrency is simple. Transactions are verified by miners who validate blocks of data on the blockchain network in exchange for rewards in the form of coins from whichever cryptocurrency they're mining. As more people join the network and start validating transactions, the value of that particular coin increases due to increased demand for it. It's this process that allows for speculation and investment opportunities within the space, something not seen before in modern finance. As such, there's no denying cryptocurrencies have revolutionized our understanding of how we store and transfer value across borders, providing both individuals and organizations with unprecedented levels of control over their assets. And while many still doubt its long-term success amidst concerns regarding volatility, usability issues, security breaches and regulatory uncertainty, one thing remains clear: cryptocurrencies will continue to be an important part of the financial landscape as they offer unparalleled access to global markets at low cost rates compared to traditional methods. Moving forward into a new era where digital payments reign supreme, it seems inevitable that cryptocurrencies will play an even larger role than they do today. So, just what are the benefits of cryptocurrencies? Cryptocurrencies have steadily gained traction over the last few years, becoming a global phenomenon and sparking intense debates amongst economists, politicians, and technologists. While many still question their purpose and utility, there are numerous advantages that come with using digital currencies as opposed to traditional ones like cash or credit cards. From increased security to faster transactions times, cryptocurrencies offer a number of potential benefits that may be worth exploring. The first advantage lies in the fact that cryptocurrency transactions provide unparalleled levels of security and anonymity compared to other payment methods. Since each transaction is stored on an immutable blockchain ledger, it cannot be altered or tampered with by anyone, including hackers or government entities. The crypto asset itself also offers users complete privacy since no personal information needs to be provided when making payments, only addresses from public wallets, which makes them virtually untraceable. This brings us to our second benefit: speed. In comparison to traditional payment methods such as wire transfers or checks, which can take days or weeks for processing times, cryptocurrency transactions typically clear within minutes depending on network congestion and fees paid by the sender. This greatly reduces wait times for both buyers and sellers who rely on timely payments in order to operate efficiently, as well as providing cost savings due to reduced administrative costs associated with manual paperwork processing timeframes. Thirdly, implementing cryptocurrency solutions into existing financial systems could help reduce fraud rates significantly due to its decentralized nature and lack of intermediaries involved in verifying payments between two parties. By removing any single point of failure, such as banks, these transactions become much more secure than those involving fiat money, where funds can easily be stolen if attackers gain access to sensitive accounts information like passwords/pins, etc. Additionally, smart contracts enable automated execution of certain conditions upon successful completion, further reducing chances manipulation while simultaneously increasing trust between all stakeholders involved in an agreement. Last but not least, perhaps one of the most enticing aspects about cryptocurrencies today is how accessible they are for people around the world regardless of economic status or location, something that has been historically difficult if not impossible until now due thanks largely advancements made in technology during recent years, allowing billions access financial services previously out of reach for many individuals living various emerging markets countries alike. Transitioning then into an exploration about how cryptocurrencies work would likely prove useful at this juncture, given all aforementioned points we've covered thus far. So let's now explain how cryptocurrencies work. Cryptocurrencies are digital money that exist solely on the internet, and they have been gaining more attention in recent years. They transcend borders and offer a secure way for people to make transactions without involving banks or other financial institutions. But how do cryptocurrencies actually work? To understand this concept better, it's important to recognize how traditional fiat currencies function. Traditional currency requires physical bills or coins and is regulated by governments as well as central banks who act like mediators when it comes to exchanging funds between users. Cryptocurrency works differently since it exists completely online and isn't controlled by any one individual entity. So what makes cryptocurrency so special? One of the biggest advantages of using cryptocurrency over traditional methods of payment is its security due to blockchain technology. Blockchain is a decentralized public ledger that records all transactions across multiple computers connected via networks, meaning no single person or group can tamper with the data stored inside them. This eliminates fraudsters from taking advantage of unsuspecting users, making this form of payment safer than ever before. Another benefit of cryptocurrencies is their privacy aspect. Unlike bank accounts which require personal information such as names, addresses, etc., anyone can set up an anonymous account where nobody else knows about it except for themselves, perfect for those looking for more privacy while conducting their business dealings online. Furthermore, these types of transactions don't cost much either since there aren't any third-party fees involved in sending or receiving payments through the system, something that would otherwise be quite costly with standard banking procedures. Cryptocurrency has revolutionized our understanding of money and made international transfers easier than ever before thanks to its speedy nature and low transaction costs. Now we just need to consider what lies ahead for digital money in terms of regulation and adoption rates around the world. Now let's explore the possible future of cryptocurrencies. Cryptocurrencies have become a phenomenon to behold, causing ripples in the financial industry like never before. It is hard to miss them as they continue to be featured in news headlines and discussed on social media platforms with increasing frequency. But what does this mean for the future of cryptocurrencies? To answer that question, it is important to understand how these digital assets work and their potential implications. The underlying technology driving many cryptocurrencies is blockchain. This innovation uses peer-to-peer networks of computers connected through cryptography instead of centralized servers, meaning that data can be shared securely without interference from third parties or government institutions. Blockchain also provides users with greater control over their money by allowing them to store funds in a secure digital wallet and make transactions anonymously. As such, it has been hailed as an alternative form of monetary exchange which could revolutionize banking as we know it today. But there are still some major obstacles standing in the way of widespread adoption of cryptocurrencies. Firstly, volatility remains one of its biggest issues. Prices can go up and down drastically depending on market trends, making investments potentially risky if not managed correctly. Additionally, regulation around cryptocurrency trading varies significantly between countries, so understanding local laws regarding taxation and use is paramount before engaging in any activity related to these digital assets. In spite of these hurdles though, investors remain optimistic about the future prospects for cryptocurrencies. Many believe that despite current challenges, significant progress will be made towards mainstream acceptance within the next few years due to continued advancements in technology and customer demand for safe alternatives to traditional banking methods. With more companies beginning to accept cryptocurrency payments and international organizations exploring its usage within various sectors including healthcare and education, it appears likely that its evolution into a legitimate asset class may soon come full circle. As such, interest continues to surge amongst those looking for new ways to diversify portfolios and gain exposure to innovative opportunities, but caution should always be taken when investing in anything involving high levels of risk. Those willing to take a leap into this brave new world must ensure they fully comprehend all aspects involved prior diving headfirst into uncharted waters. Taking time out to investigate options thoroughly might just make all the difference when trying to decide where best to place resources, a journey worth embarking upon if done right. And now a quick word from our amazing sponsor Seat, the perfect gaming chair for you. Featuring stylish designs and adjustable ergonomics, Seat is the perfect way to take your gaming experience to the next level. It's built with comfort in mind, so you can game in style and comfort. Plus, it comes with adjustable ergonomics, so you can customize it to fit your body shape. Get yours today and experience the best in gaming chairs. The link is in the description. If you made it this far, pat yourself on the back and send me some love. Hit that bell icon to subscribe to our channel and hit the thumbs up button to let YouTube know you're in love with my seductive voice. Let's move on. So you must be wondering, how can invest in cryptocurrencies? Investing in cryptocurrencies is an exciting opportunity that can bring substantial returns. With a proper understanding of the technology, fundamentals, and strategies behind cryptocurrency trading, one may be able to capitalize on its volatile nature. So let's take a deeper dive and discuss how you can invest in cryptocurrencies. 1. What types of coins are available? 2. Which exchanges offer them? And 3. Some essential tips for success. To begin with, there are many different varieties of digital currencies out there, each with their own potential benefits and risks. The most popular among these include Bitcoin, BTC, Ethereum, ETH, Litecoin, LTC, Ripple, XRP, and Dash. Each has unique characteristics and advantages over the others. It's important to do research before investing to ensure you're making the right decision for your goals. Once you've chosen a coin or two to invest in, you'll need to find an exchange where they are traded. Popular options include Coinbase, Binance and Bitfinex, as well as various other online exchanges offering support for specific coins. You can also purchase coins directly from individuals via peer-to-peer marketplaces like Local Bitcoins or Paxful. It's important to note that not all exchanges will have access to every type of coin, so make sure you choose wisely. Now that you know where to buy currencies, let's take a look at some key investment considerations when entering the world of crypto assets. Research. You always want to do thorough research into each currency before investing. This includes studying past performance as well as looking into any upcoming events such as forks or anticipated releases that could impact prices. Risk management. Remember that crypto investments come with risk just like any other asset class. Create a strategy designed around managing those risks effectively by diversifying holdings across multiple currencies if possible and setting stop losses when needed. Timing. Cryptocurrencies tend to move quickly, so timing trades correctly is critical for success. Use technical analysis tools like moving averages or Fibonacci levels along with fundamental news items to try and stay ahead of price fluctuations. Cryptocurrency investing may seem intimidating, but with knowledge comes power. Learn about the technology behind blockchain networks and develop a solid strategy built upon sound principles before taking the plunge into this new realm of finance. With dedication and practice, anyone can become successful in trading digital tokens. Good luck on your journey towards financial freedom. Let's cover some of those questions that might be burning away at you. Let's go over some frequently asked questions. Question 1. How secure are cryptocurrencies? Cryptocurrencies have become the talk of the town, with many predicting that they will revolutionize our financial system. But how secure are these digital assets? Will your money be safe if you invest in them? These questions have been on people's minds for years now, and we take a look at what lies ahead. The thought of putting your hard-earned funds into an unseen, unstable asset can seem intimidating. It may feel like walking through fire without any assurance that you'll come out unscathed. Despite this fear, cryptocurrency is growing more popular every day due to its unique properties: decentralization, immutability, fast transactions, low fees, and censorship resistance. Let us explore the security features of cryptocurrencies in greater detail. Firstly, users must generate two keys: public key and private key, when using crypto coins or tokens. The former acts as an address which other people use to send money, while the latter is used for signing off transactions, thus providing proof that indeed someone owns said currency/tokens. This method serves as a barrier against unauthorized access or fraud, since only those who know the secret code can spend from such accounts, just like a lock and key. Secondly, blockchain technology provides another layer of safety by recording all information related to each transaction securely within its distributed ledger system, DLT. As new blocks are added to existing ones after being verified by miners using complex algorithms, data stored in them becomes immutable, i.e., completely unchangeable even with malicious intent, making it virtually impossible for anyone to tamper with records retrospectively. Thirdly, there are several decentralized exchanges available wherein traders can buy/sell cryptos directly from their peers instead of having to rely on centralized third parties such as banks or brokers, reducing chances of human error or manipulation significantly. Furthermore, most exchanges offer additional protection measures including multi-factor authentication, MFA, and cold storage options which safeguard user funds from potential cyber threats and hacks respectively. Finally, there is no denying that investing in cryptocurrencies carries certain risks, but one should not forget about its numerous benefits either. All things considered, it might very well end up becoming mainstream, eventually paving way for a whole new world of finance. Let's cover some of the risks associated with investing in cryptocurrencies. So cryptocurrencies, such as Bitcoin and Ethereum, have become popular investments over the past decade. According to a survey by Cambridge University in 2020, more than 42 million people worldwide are using cryptocurrencies. With this increasing interest comes questions about what risks they may pose for investors. In this article, we will discuss some of the potential dangers associated with investing in cryptocurrencies. The first risk is related to their volatile nature. Cryptocurrency prices can fluctuate wildly due to market forces or unexpected news events. This means that an investor could make large profits one day only to lose them all the next if the price suddenly drops. As a result, it is important for anyone considering investing in cryptocurrency to understand how quickly its value can change and be prepared for these types of fluctuations before committing any money. Another issue is that there is no central regulatory body overseeing cryptocurrency markets like there are with traditional currencies and stocks. Without regulation, it can be difficult for investors to know whether they are making sound decisions or not because they cannot rely on established rules or regulations governing their transactions. Additionally, since most exchanges operate without government oversight, there is also a greater chance of fraud or other criminal activity taking place within these spaces. Finally, many governments around the world have yet to create laws specific to cryptocurrency investments, so it's unclear how taxes might apply when gains are made from trading them. There may even be restrictions on where certain digital assets can be bought or sold, which could limit an investor's ability to diversify their portfolio across different asset classes and jurisdictions. These issues highlight just some of the complexities associated with investing in cryptocurrencies, which makes understanding all of the potential risks involved paramount before deciding if this type of investment opportunity is right for you. It's clear that those who wish to invest in cryptocurrencies should do extensive research beforehand into both the technology behind them as well as any applicable legalities surrounding their use in order to fully understand what kind of returns and losses they may experience down the line. It's also worth noting that although investing in cryptocurrency offers exciting opportunities for profiting off new technologies, it also carries significant financial risks that must not be taken lightly by anyone looking at entering this space as an investor. Finally, let's discuss the hot topic of government regulations that impact cryptocurrencies. Cryptocurrencies are a complex and rapidly evolving landscape. In recent years, the meteoric rise of Bitcoin has brought them to the forefront of public interest and investment. As such, it is important for investors to understand whether or not there exist any government regulations that impact cryptocurrencies. To this end, let us explore how governments around the world have responded thus far to these digital assets. As with many new technologies, governmental regulation of cryptocurrencies tends to lag behind technological advancement. This can be likened to an ostrich burying its head in the sand. While some countries choose ignorance as their policy towards cryptocurrency regulation, others take a more proactive approach. For instance, China has taken a zero-tolerance attitude when it comes to crypto trading and mining activities within its borders, opting instead for a blanket ban on all associated activities due to concerns over money laundering and other financial crimes. Meanwhile, Japan, who views virtual currency legislation as essential in order for domestic blockchain businesses to thrive, has adopted 5 pieces of cryptocurrency legislation, which includes registration requirements for exchanges operating within Japanese territory. It would appear then that while some nations opt out completely by introducing bans on crypto activity, others seek clarification from regulatory bodies such as the United States Securities Exchange Commission, SEC. The SEC's mandate is twofold. Firstly, they must review ICOs and determine if particular tokens should be classified as securities. Secondly, SEC provides guidance as to what types of products can legally be traded by US-based exchanges and brokerages without running afoul of existing laws concerning securities trading practices. Moreover, certain states like Wyoming pass bills that offer exemptions from certain state taxes for certain token purchases made directly from developers, thereby creating specific rules designed specifically for dealing with cryptos. In light of these developments, global awareness regarding both risks and opportunities presented by cryptocurrencies is growing exponentially, making it increasingly apparent that even though governments may react slowly at times, they are still interested in protecting citizens against potential harm caused by unregulated markets, whilst also supporting innovation through encouraging investments into promising projects related to distributed ledger technology, DLT. It will therefore be interesting to observe how different countries continue adapting their policies going forward so as best protect those investing in cryptocurrencies while fostering wider acceptance of this revolutionary form of finance. So, in conclusion, the future of cryptocurrencies is hard to predict, but one thing that can be said for certain is that it will remain a powerful force in the global economy. Like a river, its current may shift and meander over time, but as long as there are those who seek to benefit from its use, it will continue to flow forward. In the years ahead, more investors and companies may become involved with cryptocurrency trading and investment. With greater resources behind them, these entities have the capacity to bring about massive changes in how people make payments and conduct transactions around the world. The potential for growth is tremendous as new technologies emerge that enable faster transactions or increase security measures, all of which could lead to an even deeper level of mainstream adoption. At this point in history, only time will tell what shape the future of cryptocurrencies will take. While no one can be sure what tomorrow brings, we must keep our eyes on the horizon and recognize that whatever lies ahead has been made possible by today's innovators working tirelessly towards a better tomorrow. Don't forget to like and subscribe to our channel, and thanks for watching.